But first up, let's talk about the Asian markets. They are largely higher right now.
When it comes to numbers this time, it's expected to be a weak quarter.
Now, supports for the Nifty will come in at two levels. One is the 20-day, which stands at 21,488. And then the low that we saw yesterday, which was below the 20-day, but which was 21,447.
China is no longer viewed as a emerging market that you definitely have to own.
Higher furloughs, weak macros are all likely to hurt Infosys growth.
And they say that 1,000 crore rupees of unaccounted cash transactions have been identified.
The street still continues to remain bullish on the stock.
And we start with a 74-point up move.
But India also is there in our pecking order, right at the top, with one of the strong overweights there.
As market becomes extended, typically narratives shift away from 1 or 2 years.
Markets are just about ambling along.
However, for the last few years, the revenue growth of Bharti Airtel has been a lot better.
It is looking decent for the markets today, but we'll have to see the last 1 hour of trading's action.
Well, can't keep this market down. That's basically the motto, whatever you want to call it. But we're back up after slipping into the red just for a brief while, 30 points higher. Well, this is the last hour of trade and closing bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, hi. Afternoon.
Hi, afternoon, Prashant. Afternoon, Nigel. Well, if you're a pessimist, you will say this market hasn't done much today because remember we hit 21,700 in the morning. We had good cues. No build-up, nothing, flat. Then the fall came. But then at least the buyers emerged. We haven't lost everything.
There's a tug-of-war that's going on. So I'll just pull up two big constituents of the markets which our director will pull up. One is the Nifty Bank, which has come off the high point of the day. It's unable to sustain at higher levels. But the other one is the one that comes into form, in the last hour of trade. That is Reliance Industries. Yesterday as well, it came in there and it knocked it out of the park. And as we speak, just take a look at that. Reliance is doing its part. It's finding its form. It's moving to the high point of the day for the second day running. While the Nifty Bank, that's not supporting. You want both these two batsmen to be in top form. For the time being, it appears Reliance is taking much of the strike, trying to play it for the team, while the Nifty Bank is still a little bit jittery. But just take a look at Reliance Industries. That's moving with some strength. It appears there is some good buying for the second day running on that counter.
Nigel, if I bleep out the names of stocks from that commentary, you might as well, I could be watching a cricket match.
And it's going to be an absolute thriller in the final 60 minutes, so stay tuned.
We're going to play a bumper music and all, and just cut to some cricket match. But anyway, but that's absolutely correct. I mean, Reliance is the reason why you've got the Nifty, which has come back and starting to charge a little bit, right? And that's a point we were making in the morning as well. It was just solely Reliance Industries, which did it for the market starting at about 240. So will it be a repeat of yesterday's price action is the question. Reliance to the rescue. I mean, Nigel mentioned Bank Nifty, but also IT, right? I mean, IT goes into earnings season today with Infi, Wipro, etc. TCS and Infosys to begin the earnings season there. But no real traction across the board. So there's only one sort of player out there which is doing much of the heavy lifting, which is RIL. Just a few levels before we go any further. So supports for the Nifty come in at the 20-day moving average. I mean, same numbers that we put out in the morning, 21,488 and then 21,447. Those are numbers in the Nifty. On the Nifty Bank, which is also sideways, the next target or support, whatever we're going to call it, is the 40-day exponential, which is 46,720. That's about 1.5% away from where we are right now. Mid and small caps are outperforming, but they're also off the highs. And of course, the big global data point is US CPI. Will it make a difference when we come back tomorrow? It'll make a difference if it is wildly away from what the consensus out there is expecting. I think the consensus is around 0.3% growth on a month-on-month basis. Surabhi.
Well, absolutely. I mean, that's, I think, the big data cue that we're watching out for in terms of international action. Just a word on some of the mid-caps that have been active. Obviously, the stock of the day for the wrong reasons has been Polycab. By the way, it's again down 20%. So I think in between, there was some buying at the lowest level, but, no such luck. Some of its peers, KEI Industries, they've tried to recover from the fall, but still down about 5.5% on KEI, down 5% on RR, Cabell, and this has to be one of the big stories of the day. Other than that, on the mid-cap screen, there's plenty of excitement, plenty of action. The jewelers are at it. We've been making that point. Again, a 20% move on an RBZ Jewelers. some of the others like Moti Sons as well have had one more strong trading session. So this is, strong side of the market. Then you've got something like an Easy Trip. Easy Trip, by the way, is up 19%. That's the extent of the rally on some of these stocks today. And on the volumes chart, you can pick out some names on the financial side. Good day for an RBL Bank. Mannapuram is recovering from the earlier losses that we were seeing in the earlier part of the week. On Tata Power, there's some buying, SJV, and some of these power stocks, they seem to be doing fairly okay for themselves. So the question is now what? Given that it's so volatile, we've seen that yo-yo on the Bank Nifty in the last couple of minutes. What should you be doing in the last hour? Let's put that question, as always, to Mitesh Thakkar. Mitesh, afternoon. You blink and something changes here on the screen. It's become that choppy, right? Look at the Bank Nifty in the last 15 minutes. What would your advice be on the indices first?
So I think the good thing, Survi, is that, the markets are not falling and there's some kind of rotation happening. The Bank Nifty has picked up as a couple of FMCG names like HUL, etc. and ITC are turning slightly weak. And similarly, I think Reliance, which had a breakout yesterday, is also seen a good follow through. And to me, Reliance, I think, looks like a stock which has triggered a medium-term uptrend, making fresh swing highs if you adjust for all the corporate actions and all. This is a fresh all-time high for Reliance. Now, this means that this month's low of 2580 is unlikely to be taken out, and I think a target of 29,53,000 looks a very minimum on the medium to longer term charts. So very bullish pattern over here that should keep Nifty in good health, and I think it should come to rescue in any correction which the index might face. So broadly, I still believe this is a consolidation, but with Reliance and banks coming back into some kind of momentum, good chance that we will play this sideways consolidation out and then eventually break on the upside. So that's the initial feeling, but we will take it as it goes. And for the time being, the consolidation, the range bound view remains in the short term. On the stock side, I have a buy on BPCL. That's been sideways for many days and now is showing first signs of picking up again on the intraday charts. So buy here with a stop at about 453 and a target of 472, 474 can be looked at. And the other stock which I like is About India. It was a recommendation a couple of days back as well. Even now looks very strong, so we'll suggest a fresh buy. Keep a stop at 24,900. Look for targets of around 26,000.
Okay. All right, got that. Mitesh, thanks very much. We will come back to you for some more stock ideas later in the program. But right now, let's look at the big Nifty winner. Hero Moto is a stock in question. Stock's up about 5%. It hit a fresh 52-week high today as well. Very strong traction on Hero Moto. It's been a fantastic mover in the last 1 year as well. The stock's up 60%. Now, what is the buzz today? This is a CNBC-TV18 exclusive. We have Parikshit bringing us this story. Sources are saying that Hero could be unveiling a range of new products, and a lot of them would be very premium products, and this could happen at an event, a company event on the 23rd of January, Parikshit. Is that right? Tell us more. The market's really excited about this whole premiumization push.
Yes, it is the second edition of the Hero World event on future mobility. The last one was held in 2020. Now, this one will be, again, very important because it's not just new motorcycles. Hero MotoCorp will be unveiling a medium to long-term plan in terms of its product launches, offerings, expansion plans across the country, innovation that it's happening at its R&D center in Jaipur. This is where this event is going to be taking place. The big launch, of course, will be that of the 440cc Maverick. Now, this is based on the Harley-Davidson X440 platform. Everyone knows that X440 is a motorcycle that Hero MotoCorp manufactures for Harley-Davidson only for the India market. For that moment, it is not exported right now. The same platform will be badged as a Hero MotoCorp motorcycle as Maverick and will be sold all across the country, probably a greater retail footprint than the Harley-Davidson X440, and this one will be exported as well. So it's very important in a sense because this is the first time that Hero MotoCorp is directly entering the 400cc plus segment. It is important from a premium point of view. The market share, very recently, Hero MotoCorp has been facing a lot of pressure from the likes of Honda Motorcycles and Scooter India. If Hero MotoCorp has a 32% market share, Honda has a 24 or 25% market share. So if in future Hero MotoCorp wants to continue retaining its market share, then it definitely needs to do well in the premium segment and exports as well. So apart from the Maverick, there will be a range of motorcycles in alternate fuels, flex fuel, electric scooters, and ICE vehicles which will be showcased. There could be a 125cc motorcycle as well. And all of those products, some of them will be prototypes, some will be launched sometime later this year. But important to see what is the roadmap that Hero MotoCorp really comes out with for the next 5 years.
Okay, Parikshit, thank you very much for joining in. Sounds quite exciting. I'm sure you will be either at the event or tracking it very closely, and you'll get us the latest. So premiumization is the big theme and a big roadmap ahead for the company, Hero MotoCorp in focus. Thank you for the details. I'm just wondering, and you know, we have a rider right here next to us in the studios. It's just really interesting. Maverick, first of all, I love the name. 440cc. Now you tell us, when from a consumer standpoint, there's the Harley. I'm just thinking that, you know, if a consumer is out to, you know, buy a motorcycle, Harley versus a new homegrown brand in that, I don't know, there's a brand power of the Harley, but then you have Bajaj and now Hero coming out with these big bikes. You wanted big bikes, right? Or you were asking that to Mr. Rajiv Bajaj.
See, I'm riding a 650 right now.
Oh, God. Asking the wrong guy the wrong question.
So, I am looking for bigger bikes, actually. But, you know, I'll tell you what, when we were growing up, there was only one bike you could buy, right? The 350 Royal Enfield, the traditional one.
Yeah.
And you could maybe get the Machismo, the 500cc, or there used to be the Lightning, which was a 535cc. But now look at the kind of choice. You know, these young bikers out there, they're really lucky, provided they have the money or they manage to get their parents to buy them one. But the choice is there, you know, and so it'll be the, you know, the broader theme is that just take a look at the options you have at 400cc plus. You know, you're having the Triumph, you have the Hero, you'll have, you know, this new bike coming out of the Hero stable. And things are really heating up, right? So you want to play the premiumization theme. If you're looking at cars, then maybe Landmark is the one you're looking at. And if you're looking at bikes, everyone is trying to go in there and get their bite out there. So as a user, I'm very, very happy. But as a shareholder, we'll ask our guest.
No, absolutely. Let's take the conversation to Deven Choksi. He's joining us on the show this afternoon. Deven, thanks for joining in. You know, it's all been about the battle of the big bikes in 2023. And I guess this is going to continue, given what Hero is about to unveil. Your thoughts, and which of the stocks would you still buy despite the big rally?
Yeah, good afternoon, Surbi. Certainly, I think the premiumization of two-wheelers is definitely going to be the rule of the game going forward as well. Largely because of the fact as the consumer gets more money in his hand, I think his spending power also increases, and I think that's where the premiumization position, I think, becomes more clearer for the auto companies. Bajaj certainly, I think, has led this particular path, and they have been smartly running this particular activity. They have got all four categories, I believe, I think, which probably they need to have in the bigger bikes, starting from Pulsar at the end, and then the KTMs, then the Triumphs, and then Husqvarna. Each of these particular range of motorcycles, I think, are basically suggesting that on a lower volume, they are generating higher revenue and at the same time maintaining higher amount of profit. Because with this premiumization comes along with spending power, and that is where I think the profit is made. Whether each and every other company wants to get into this particular space, answer is yes. Whether they'll all be creating a similar amount of volume, one will have to wait and see. In my viewpoint, I think as the market is unfolding, probably I think the role clarity of Bajaj, I think, is being seen bigger compared to many others. So let's wait and see. But yes, I think the performance of premium bike is going to add into the balance sheet ultimately for most of the two-wheelers.
Okay, all right. Deven, stay on. We'll have, of course, more questions for you. From the gainer, let's move to the loser. And we were talking about this earlier. Polycab, the pressure is back on 20% down. We have Hormaz joining in, and he's been looking at, you know, a lot of factors like the price movement on the stock, the major holders, etc. A full view. Hormaz, fill us in.
You know, for a stock that has been a 10-bagger since it listed, the recent turn of events are turning out to be quite a bummer for Polycab. Now, today's drop is the biggest that the stock has seen on record. Now, the last 5 days have not been very smooth either, including the 9% drop that it saw on Tuesday. But despite this, majority of the street continues to remain bullish on the stock. 19 out of the 31 analysts who track the stock, which is almost 60%, now they continue to have a buy recommendation on the stock, while 6 analysts each have a hold rating and a sell rating. Now, as of Wednesday's close, consensus implied a potential upside of around 14.5% on Polycab. Now, the number of sell recommendations have also declined for 3 months in a row. Now, currently, Jefferies has the highest price target on Polycab, which is at 7,000 rupees. This has a potential upside of around 42.5% from Wednesday's closing levels. Now, others among the top 5 have potential upsides of anywhere between 25% to 30%. Now, as I said earlier, Polycab has been a 10-bagger since it listed in April of 2019. The stock had an IPO IPO price of 538 rupees. It was subscribed 51.8 times, making it the fifth most subscribed IPO of 2019. Now, in December last year, the shares made a record high of 57.33. And barring the start of 2024, Polycab shares have delivered positive annual returns every single year since they listed, including returns of over 100% last year as well as in 2021. Now, promoters of the company have gradually reduced their stake from around 68% in September of 22 to just under 66% as of September of 23. However, what's interesting to note is that the shareholding of domestic mutual funds is down to a 3-year low, and that is currently at around 6% from the 8% peak that it saw in March of 2022. Now, on the flip side, foreign investors have increased their stake over the last few quarters, and FPIs now own around 12.5% of the company compared to around 6.5% that they had in September of 2022. Now, the last 5 days have also seen around 30 to 40% of the total shares being traded marked for delivery, with quantities ranging from as low as 27 crores to as high as 650 crore rupees. Now, the street does not like uncertainty, and that's exactly what's transpiring with Polycab. Now, while the management has denied any wrongdoing, the screen is painting a different picture altogether.
All right. Hormuz, thanks very much for that. That's a pretty comprehensive look at what's happening with Polycab, not just, of course, the news, but, technically the stock, etc. as well, is taking a hard knock. Devin, of course, is still with us. Devin, with something like a Polycab, I mean, what will you do? It's such a huge outperformer, and the cut has also been equally severe, at least the last 2 days.
Yeah, Prashant, I think from what 5,500 price level to now 3,900 odd price levels, I think the sharp fall has already happened. 35% odd round kind of a fall has already happened in the stock. Well, I guess I think the important point out here would be twofold. One, I think look at the fundamentals of the company. The valuation at this point of time stands at around 35 times on forward earning basis. So that is not cheap. Again, I think it is not too expensive as it used to be, but it is still not cheap. Given the fact that in last 3 or 4 quarters, I think the sales have stagnated around 425 crores, and operating profit also similarly has stagnated around at the lower levels. So to a greater extent, I think one would probably expect that unless you see a jump into the profit performance and the business performance, probably the expensive valuation will not hold the ground. And that is where I think the challenge comes in. That's what market is teaching most of us, that in a premium situation, when I think everything is looking good, any negative news flow, market has no room to accept those negative news flows. And as a result of which, I think the treatment comes into the stock price. In my viewpoint, I think the stock holds the potential to grow higher amount of revenue as well as I think the profit. If they do return back to 35-40% kind of a growth rate in subsequent quarters, then possibly somewhere in the vicinity of around 30 times odd price earning ratio, I think it could become a buy opportunity. But at this point of time, I think the negative flow is definitely driving the stock price down. We'll have to buy this particular stock, I think, in this fall. If at all it is coming around to 30 odd times kind of a price earning ratio on forward outlook basis.
Okay, all right. Hi, Devin. Good afternoon. Good to hear you. So that's the call on Polycab. But, it seems the entire sector has gone for a de-rating today. Some of the stocks have nothing to do with this. Are some of them giving a buying opportunity? KEI is down. You have RR Kabel as well that's down.
Valuation-wise, Nigel, I think most of them are, I think, in the same range, I believe. And I think nothing is cheap. So unless I think you have a reasonably high amount of growth, see, if you are talking about 30 odd times valuation, then definitely the market is expecting the growth above this particular rate of valuation. That is, a PEG has to be above that level. I guess I think most of these companies probably will take time to grow. Currently, the market has given the premium valuation based on the 2 years of future outlook earnings. So to a greater extent, I think if this 2 year period, some amount of correction in the market taking place, then these stocks will underperform. Also, at the same time, from the technical point of view, these stocks have had a very sharp rally in previous years and previous quarters. So as a result of which, I think you will probably wait for buying in the correction. In my viewpoint, I think this market will give you corrections, I think, in some of these stocks which are richly valued. And that would be the right time to buy into the portfolio.
Okay, all right. Devin, stay on with us. We have to take a very quick break, but we do have more questions, so we'll come back. and continue this conversation. Also, a reminder, we will have Jigar Mistry of Buoyant Capital joining in the next couple of minutes as well. Keep it with us. Welcome back. It's literally Reliance doing the firefighting, 2.5% up. That continues to be the stock that is in focus. Infosys, by the way, is down 1.5%. Just rechecking some of these IT stocks ahead of the event, ahead of earnings. So Infi is the counterweight on the other side. Lever and L&T, these are some of the other big ones. In fact, even ITC, they're ensuring that the Nifty is not getting an adequate bounce in terms of moving to the high levels of the day. That's Lever. Lots of pressure on that stock. Let's talk about, another mid-cap that's been in the news. Shriram Finance is up almost 6% as we speak. It saw a brokerage upgrade that seems to have gotten the market really excited. We have Abhishek with the details. Abhishek, tell us about the views here.
While Goldman Sachs has written on Shriram Finance, they have upgraded the rating to buy from neutral, and target price has been increased by more than 43% to 2,758 per share from the earlier target price of 1,926 per share. They have raised the earning estimate by 10% for FY25 and about 13% for FY26, and they have given the rationale that they expect better profitability, EPS CAGR of about 22% between FY23 to FY26, and they expect strong credit growth, 19% CAGR between FY23 to 26. Remember that over the last few years, the growth rate in the AUM has been around 10 to 15% kind of a level. So improving asset quality, that is decreasing gross NPA ratio as well as increasing the provision coverage ratio, with credit costs coming under control, they expect the stock to benefit in terms of valuation per se. So a favorable macro for underlying demand for the commercial credit portfolio augurs well for Shriram Finance as well. Currently, the stock is trading at 1.4 times 1 year forward price to book value versus 10-year average of about 1.5 times that the company has seen over the last few years. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Deven, what do you make of this? Goldman's clearly quite bullish on Shriram Finance. What about you?
So I guess on one side, the company is strategically positioning itself more into the area of expanding the book on a pan-India basis. And it's from pure South focus, I think they are basically wanting to expand into the pan-India basis. Second aspect about, I think, is the focus on bringing the SME into the portfolio. So to a greater extent, I think the market likes this kind of a story where you distribute your risk, I think, in the portfolio by adding systematically the other channel, which they are trying to add into. Fortunately, we see the situation of interest rate coming down somewhere in the second half of the financial year 24-25. And that's where probably I think the majority of the NBFC companies would probably have a situation of lower cost of funds. And that could possibly mean better times going forward as far as I think the margin front is concerned. So on one side, economy is growing, the size of the EM book is growing, and at the same time, I think the equations are turning favorable. The companies like Shriram, companies like Poonawalla, which are basically focusing more in the areas of using the technology to lend and at the same time creating the book size which is fairly distributable, I think that may probably make more sense. Fortunately, in this company's case, even the valuations are not so expensive. So maybe I think some bet on this particular front as well one can take for an upside into the stock going forward.
Okay, so that's a view on Shriram Finance. Deven, finally, just quickly before we let you go today, thoughts on Reliance? The giant is finally beginning to move. I'm not sure, I mean, have you seen any immediate triggers, or maybe this is buying ahead of earnings? The long-term story is well mapped, but just your thoughts on the near-term move, what we've seen the last 2 days, and of course, result expectations.
Survi deri se aaye magar durust aaye, as far as Reliance is concerned. maybe I think this particular stock did not participate enough, I think, in the market rally which has taken place. The current all-time high position is also indicating that this particular aspect is now being taken care of. On the growth front, the retail continues to show the promise with around 18 to 20% kind of a growth continuing. With own brands coming into the portfolio, the retail is showing better signs of profitability also as well from current levels. At the same time, the Jio platform is continuing to grow at the steady pace of 20% plus growth. With Jio Fiber coming into home and enterprises, the chances of getting the accelerated growth would be remaining very high as far as I think the Jio platform business is concerned. Fortunately, in the refining business and in the petrochemical polymer business, the crude oil prices are down, as a result of which I think we are seeing a better amount of margin performance for the company going forward, including in the current quarter. So all in all put together, all equations are positive for Reliance. At the same time, in 24-25 financial year, the renewable part of the portfolio is likely to start getting into some kind of a contribution into the books. And that is where probably I think the market would remain more excited about, I think, the financial year 24-25 for Reliance. Maybe current action in the counter is suggesting that some amount of short covering led buying is happening into the market, which I believe, I think, justified and probably it could sustain on the other side.
Okay, all right. Deven, we'll leave it there. Thank you very much for your time. Appreciate you joining in with that perspective. Well, you know, we got the market, which is sort of middling around 40 points higher, 21,660. is where we are trading at. So in more ways than one, this looks like the kind of market we had yesterday. Yesterday also, the market did nothing for the first many hours, and then starting 230, 240, there was a spike when we ended about 80 points higher, largely thanks to Reliance. There's still some time to go. We'll see. But 40 on the screen for now. Jigar Mistry is with us from Buoyant Capital. Jigar, good to have you with us here. Thanks very much for your time. You've been advocating some caution for some time, especially in the small and mid-cap space as we begin 2024. So just run us through some of the reasons why you feel so strongly that one needs to take one's foot off the pedal with regards to exposure in that space. And alternately, what would you do now?
Hi, Prashant. Thank you as always for inviting me to the show. It is increasingly looking like we are borrowing, a lot of returns from our future. November, December, we have seen markets, broader indices move up something like 14%. Only thrice post the GFC, I can think of this having happened. One clearly is during the 2013 rally post the sort of fragile five. Then we have seen it post COVID, and now is the third time. And I think the two reasons which are broadly given that explains this is how BJP winning states increases the chances to form a stable government at the center, and Fed looks like it appears that it has taken the foot off the pedal and will start seeing rate cuts again. I think with both those scenarios, it looked like that the probability going into it was non-zero. So, increasingly, I do not really think the way stocks have run up is the way we should have gone about doing this. A lot of stocks since March 2030, 250 to be precise, have gone up more than 100% or so. 3 or 4 of them have gone up 500% or so. And I think it is increasingly appearing like people are throwing a little bit of the wind to the caution to the wind rather. So I think we want to believe that market always rallies in one cycle, but I'm happy to sort of give out the data on how in that rally it looks like things will go just one way and then something non-meaningful occurs and we sort of reverse the things around. So I think that's where we are, and we have had a beautiful rally so far. Let's not push our luck beyond a point and try to take some foot off the pedals.
We had the gentleman from CLSA, Vikash, earlier on the show. I think it's that kind of day where our experts are telling us, don't be too greedy. The theme of his note is greed is not good. So I think you're saying the same. Let's not push our luck, right? Jigar, afternoon. So just give us a sense on how, you have structured the portfolio right now. Did you take some money off the table? Have you made any changes in the last couple of weeks? And what's the positioning now, looking at the events that lie ahead?
Good afternoon, Survi. So, I think it's the same thing. Take some money off the table. We run managed accounts, which means new money can be run differently from the old money. And clearly in accounts that we are getting newly funded. And that's the thing with sort of the good markets, right? The flows actually go on much higher. And then we are communicating it to everyone that will take time to get fully deployed. And in the older accounts, we are creating some amount of cash as well. And lastly, I think cycles sort of are not just visible at the sector level, which is very, very prominent as we speak, but even in the market cap level. So if we were talking somewhere around April, May, we were 65% small and mid cap. People were still happy buying debt products and life insurance post budget changes back then. Today we see that number in the December fact sheet below 35%. So I think with a lot of small and mid caps, especially, liquidity means a lot, right? You can only sell at a time when liquidity is sort of so buoyant, for a lack of a better word. But once the market starts sort of getting into its own drive, the liquidity dries up materially, and then you find it very difficult to get out of the businesses which have run up a lot. So at least for a fund like ours, we would want to believe that a healthy mix is important. But bottom up, a lot of businesses, money and capital is being thrown into businesses which are not making a lot of sense. For example, two-wheelers. Right, 100% sort of moves in some of those names in the wake of tepid volumes, sort of embedded value. EV might account for 80% of sort of incremental sales in the next 5 years. And we are essentially building in that the profitability of both of them will be similar. So I think sort of IT, auto, to some extent utilities, and there are some sectors which are really expensive but decent, like capital goods, some small and mid caps. So idea is to sort of tilt the portfolio to more or less brace for impact rather than look for the next multi-bagger.
Hi, Jigar. Good afternoon and good to see you in. Jigar, do you all have any exposure to the wires and cable space?
Hi, Nigel. Good afternoon. Good to see you as well. We have RR cable. I think that's something we added, I think, a couple of quarters back. But I think that's about it. It's not a very large position. I think what's happening with the news around Polycab today is that people are maybe extrapolating the fact that whether this is an industry norm and whether this is how exactly the business is done. Sort of that will likely have an impact on the sector as far as we can tell for the next few months, and unless this becomes a widespread issue, there is not really, as far as the exposure that we have, we don't think that's a meaningful impact as of today.
You know, Jigar, Polycab is down from 5,600, 5,700 to 3,800. Now, the growth that they're talking about could very well continue. This obviously will be a bit of an issue, and this is what raises some corporate governance issues, you know, because of the kind of news flow. The management, we're still to hear from them officially and for them to come and clear the air, particularly on what we heard last evening. How would you approach it? You know, since you already have some exposure to the space and the growth story could look good, does it provide a buying opportunity? Either RR Cable, since it's down 5%, or a Polycab?
Right, Nigel. So I think, see, one, we need to sort of take a step back and look at where, yeah, it's an interesting space. But would say a business like this deserve a valuation or a market cap which is higher than, say, ICICI Lombard, right? Sort of a player that's building into this space versus you compare the largest sort of GI business and that's available at 65,000 crores. So there are a lot of businesses which we may want to sort of take a step back and decide on where the incremental capital needs to get allocated. Having said that, yeah, you know, sort of the other cable companies have fallen without a reason which can directly be attributed to it. So we would tend to sort of look at a lot of these businesses, but a broader, meaningful allocation of capital to businesses where, you know, the valuations are way ahead of what we think is fair needs to be sort of tapered down a little bit, I guess.
Jigar, one of the areas where you think things have gotten a little ahead of themselves is utilities, right?
Right.
Why is that? I mean, are you talking about the entire power space, the value chain, or just pure utilities?
Largely the power chain, Prashant, because see, sort of, and maybe this is, you know, some reminiscence of being the utilities analyst for a very long time. But you look at the power chain in India, you have coal mining, generation, transmission, and distribution. Now, the first three part of that chain is covered under the central laws, and you have both private and public participation. Distribution is predominantly, there are a few circles which are privatized, but predominantly a state subject. Now, the key question in this sector is whether politicians take electricity to mean that as a ticket to their re-election to the state, or it is considered to be a commodity which is fairly priced. I think in that sort of tyranny between the federal and state politics, distribution sector has seen several rounds of, you know, it trying to get upgraded, like 2012 APDRP, 2015 Uday 1, 2019 Uday 2. And as a utilities analyst, I was excited every single time, but increasingly it looks that the systematic solution to this problem is not present. And in that scenario, the long-term PPAs will not be signed. You can keep trying to apply bandages to sort of a bullet wound, and that will make some companies good at some points and not at others. But the system solution is not in place, in which case most of these businesses have been re-rated. Some of them are actually second derivative, that there is a power deficit, which means, you know, NTPC will sort of make more power and therefore BEL will get more orders. But that, I think, is stretching it beyond what is, at least I would consider, normal. So we would want to wait and see whether this is a sustainable solution is present for the sector, in which case this will start making a lot of sense. Otherwise, I think we have seen the best of the times for utilities as of now.
Okay, all right, Jigar, we will leave it on that note for this afternoon. Thank you very much for joining in. Appreciate you being with us today.
Thank you.
We'll take a break with the news. Nifty is absolutely flat, just about 25 points up. Take that break, come back and find out what the dealing room buzz has been like today. We'll have Nimesh join in. And of course, then some trading calls coming up with Mitesh as well.
Welcome back to Closing Bell. Well, the markets are holding in the green, but we're not able to build onto those gains. Let's find out from Nimesh what's going on in dealing rooms. Hey, Nimesh, go ahead.
Hi, Nigel. A relatively lackluster day of trade. After a gap up opening, we're unable to build on that gains. But from a flow perspective, watch out for the last half an hour of a bit of a surge in the Nifty names, because for the second day running the senses, there's going to be a small market rate close basket buying at a leading FI desk. From a sector perspective, the rate sensitives are doing good today, and within that, the NBFCs are well bid. So a lot of traction in the NBFC names, and generally the anticipation is this quarter will be very strong for NBFCs across the board. So not only the FNO names, but even the cash stocks within the NBFC names are doing good in trade today. I guess from a trigger point of view, a bit of lackluster could be also because all eyes will be on the US inflation data tonight. So that's going to be a big trigger to watch it for. And of course, the big tech earnings will come out, and that will set the tone not only for the overall earnings season, but for the IT names as well. So that's something to watch. But from a flow perspective, the last half an hour could be a bit of a rush in some large Nifty names.
Nimesh, in terms of individual stocks, what are you picking up?
Well, Prashant, in terms of individual names, there were a couple of large blocks in two mid-cap names, one, the Suvyet and Bharat Wire. In both the names, more than 1.5% equity got changed hands. And I understand a US-based, US-based long-only fund was a buyer in both the names. So the disclosures could be interesting in both Suvyet as well as in Bharat Wire. The second stock is Ircon. Within the PSU basket, this is one name which is well bid as well. And I understand some bit of HN interest is back as well. And the street is anticipating a large order win for Ircon very soon. So that's the trigger to watch out there. The third name is Indus Tower. We saw a big upgrade from BofA Securities 2 days back. And since then, the stock has been in a very narrow range. But I understand there's going to be a large block deal very soon. A likely clean-out trade from a couple of large FIs is likely in Indus Tower. And the last name is Trent. That's been buzzing off late, big volumes as well. But again, the stock is at 52-week high, but some bit of selling is also clearly visible there. So some bit of profit booking from larger FIs for the in Trent for the second day running.
Okay, all right, got that. Thank you very much, Nimesh, for all of the chatter, all the buzz. We now have Mitesh back with us. Mitesh, what thoughts now? Indices are still very range-bound. Any fresh stocks that have caught your eye?
So I think on the stock side, I have picked up two stocks right now. One of them is AB Capital. That's closing near the day's high, and the structure has improved dramatically over there. So that's a buy with a stop at 175.5 for targets around 190. And Deepak Nitrate with a disclaimer that it's a part of my holdings. So there's vested interest. Deepak Nitrate is more of a BTST kind of a call. Keep a stop below levels of 24.55 and look for 2,500 as the target.
Okay. All right, Mitesh, thank you very much for joining us today. You have a good afternoon, and we will see you with the market action tomorrow. On to, of course, the next big event, and that is these big IT numbers that we're watching out for. TCS, Wipro, both after market hours today. Rima is here with the expected numbers. Rima, let's start first with TCS.
Well, in terms of numbers, very, very quiet and muted. So for TCS, the dollar revenue is actually likely to decline by 0.2%, could be flat on a constant currency basis. And the range of expectation is fairly wide. Constant currency revenue growth range, according to analysts, could either go down by -1%, though there are a few who believe that there will be some growth in the top line. So what will be the factors weighing on the growth numbers? One, the macro environment has been weak. Discretionary spends have been under pressure, and plus Q3 typically has furloughs, but this time due to weak macros, the furloughs could be more than higher. But offsetting that to some extent will be the large $1 billion deal with BSNL, which will start contributing to the top line. EBIT margin seen flat at 24.3%, bottom line seen flat. But remember, at the absolute bottom line, the company has said that they will be making a provision of $125 million in relation to the Epic case. Now, what will you track? You will track commentary. The TCS management has been very reserved about giving you a forward-looking guidance, but any, the body language, any signs that there are green shoots in the macro environment, discretionary spending will start improving. Also, this ramp up of this BSNL project, because while it will contribute to the top line, the fear is that it could compress margins. Also, the large deal wins for the industry have been on the muted side. Now, in the last 3 months, the stock has been up about 3 to 4%. In the last 1 year, it's seen a rally of 16 to 17%, pegging its valuations at 27 times forward multiple.
Well, then you can catch the TCS CEO who will be addressing the media after the company's third quarter numbers today at 5:30 p.m. only on CNBC TV18. Well, Rima still staying with us. Rima, tell us, Infosys as well will be reporting numbers. What do you expect from there?
For Infosys, there could be a revenue contraction. So dollar revenue is seen down 1.8% on a quarter-on-quarter basis. Even in constant currency terms, revenues could decline 1.5% to 2%. Margins for the company could also shrink by about 80 basis points to 20.4% because of wage hikes which are effective 1st of November. Profits, therefore, could see a little bit of a contraction, 3% down. Now, there is a possibility we could have a guidance cut by Infi. The current guidance is for 1 to 2.5% top line growth. The upper end of the guidance of 2.5% could be trimmed to 2%. So 1 to 2% could be the new guidance. If that takes place, this will be the third guidance cut by the company. It had started the year with 4 to 7% growth, and ultimately we're looking at a very low single-digit kind of growth number for Infy. Margins guidance is likely to be maintained at 2022. Well, in terms of management commentary and the focus, it will be on the macros, the demand environment. But apart from that, even the senior level exits have concerned the street. And secondly, there was this cancellation of a large $1.5 billion MOU with a global client. It wasn't a signed TCB, but it was a large MOU cancellation. So the reason for that will be asked by the investor community. Back to you.
All right, Rima, thank you very much. And of course, catch all the excitement and action from the Infy earnings as well. The press conference will take place. We'll hear Mr. Salil Parekh speak at 4:30 p.m. today. Of course, that's where all the action starts. So right here on CNBC-TV18, catch all about the big IT numbers. Well, right now, let's move on and get you a snippet from the mutual fund world. Aditya Birla Sun Life Mutual Fund has come up with its outlook for the year 2024. Our colleague Rachna caught up with A. Balasubramaniam, Managing Director and CEO of the asset management company, to find out what lies ahead for the sector as a whole and for investors in this new year.
Definitely, I think the industry has been gaining more and more prominence from investors' point of view. Both on recognizing this an asset class that they have to make an investment. Second, recognizing the SAP way of investing in mutual funds is also another big trend that you have seen. But having now realized and recognized that the best way to save their money into the mutual funds is the SIPs, and having now gained popularity, I think even going forward, and most of the incremental consideration will come to the SIP for mutual funds. I see the number keep going up. I also see the registration numbers keep going up. But I think the broad trend is actually more towards building SIP, which is, I think, it will be long-lasting, it will be more sustainable. It will also give right experience to the investors if he continues to make the investment in the market to the SIP. And plus, we also no need to worry about volatility. That's what I mentioned in our presentation as well, that volatility will be completely taken care if you invest to the SIP model.
Sure. So do you think one of the bigger themes this year is going to be global decline in interest rate cycles?
Yes, as we presented by our co-CIO, Mr. Kaustubh Gupta, on fixed income side, we do see this year US may take the lead in cutting rates by about 50 to 70 basis points the second of the current calendar year. And there's also some little probability that US may see a slowdown both in terms of job rates and inflation also should get moderated from global inflations, basis which we are expecting a rate cut cycle to begin this calendar year from US. And India, our own belief is this year will remain flat, and any rate cut reductions would probably be a thought that could occur in the year 2025.
So speaking of this US-India connection, let's say we get to a situation where US is in deep recession. How do you think Indian markets would fare through that?
See, from India point of view, as it is so far, we've not only been one of the best performing economy in the world, the way I think we have built the base for the future, we will continue to see a momentum more in favor of India, both on the economic growth by way of GDP measurement. Second, from stable interest rates point of view, India will remain a prominent country. And as the interest rate starts coming down globally, naturally the emerging market flows will go up because the interest rates low will drive actually the money out of the country. Therefore, India will become the large component of that recipient of the foreign flow that could come into the country.
All right, that's A. Bala of Birla with his thoughts on 2024 and some of the big themes. The rate cuts, he believes, is going to be one of the big ones. We'll take a quick commercial break here. More market talk on the other side. Ambarish Baliga should be with us. There's 10 minutes to go for close. Stay with us. right, welcome back. 30 points is what we have on the Nifty with just about under 10 minutes to go for close. Amrish Balega is with us now to take us through what he's making of things. Amrish, hi, good afternoon. Before I ask you about the market and what's happening with Polycab, etc., let me get your stock out of the way, right out of the way. Which one is it today?
The stock idea is Star Health Insurance. It's a leader in retail health insurance segment with a 33% market share. And they have more than 670,000 agents across the country, which again is growing at about 16% CAGR over the last couple of years. And technology is a major focus area for them. Policies are issued digitally for more than 65% by premium value. And they have a much improved fraud management system that has ensured increase in rejection of the fraudulent claims. So this has improved the margins. In fact, they have a network of about 14,200 hospitals where they offer cashless facilities and best-in-class OPEX to gross written premium ratio, which is of 17%. They had losses for 2 years before FY23. Now FY23 became profitable. FY24, we should see the profitability increasing. And in FY25, I'm expecting an EPS of about 20. And based on this, I have a target of 700.
Okay, 700 on Star Health. Got that. Amrish, are you buying the dip on any of these cable guys? Maybe not Polycab, maybe it's peers, RR, Kabel, and the other one, KEI.
No, in fact, they say that public memory and, in fact, investors' memory is short, but it's not so short that it'll get over in a day. So I think we'll see some more downside. I think, something like a Polycab, we could see levels of about 3,500 levels or below. But then if you speak to people in the electric trade, they believe that this is a normal practice in trade. And because of which we have seen raids happening on Havels, which happened a couple of months back. RR Kabel had, a raid about a month back. So I think this is quite normal. But from a stock market's perspective, it's clearly a corporate governance issue. And with such a huge institutional holding in Polycab, it's quite natural that there'll be a sell-off. And that's exactly what we are seeing now. But then I suppose in the next 5 to 6 months could be forgotten. This is what history has shown us as far as the markets are concerned. So I would suggest that anywhere below 3,500 levels, maybe 3,300 levels, I think that's the time to start buying. Because whatever said and done, the growth, I think, will continue. Whatever the management has talked about, the growth for Polycab, I think that will continue. So after a year, I don't think anyone will be talking about this incident.
Interesting, Amrish. The problem was the valuations were already so steep. So, it gives that scope of error very, very muted. But as you said, high institutional stocks, some of those institutions, they are forced to just sell on the screen. And today, it will end at the low point of the day. But Amrish, let's talk about one stock that's done well in the last half an hour or so. That's EIL. One of those stocks which have returned, I think, to the levels that we've seen 5-6 years ago. At that time, there was plenty of promise, but it didn't deliver. What's your view on EIL? There's some buzz that maybe they'll get an order. Nimesh as well told us in one of his D-Street charters a few days ago.
No, see, at these levels, EIL is surely getting expensive. I was recommending this stock when it was in the 80s and the 90s. And it was testing our patience. It was not just crossing 110, 120 levels. But now with this sort of a move, yes, I think order flows will be there, no doubt. But then the issue now with all these companies which are getting such huge order flows, and especially someone like Engineers India, the question is how will they execute it? I think execution could be a red flag going ahead. So at these levels, I'll not buy fresh, but then if one can possibly hold on with a trailing stop loss. Because of the order flows, you can see slightly higher levels. But surely, I would say this is an investment stock at this point of time.
All right, Amrish, we will leave it on that note for today. Thank you very much for joining in. Good connecting with you. Well, we're down to the last couple of minutes before the day closes out. So let's just recap. What for the bulls has been a bit of a disappointing session because they could not build on the momentum that we had. In the morning, we came in on a strong Wall Street close, good Asia, decent European market action. But on the index, that's the Nifty and the Bank Nifty, we didn't find that kind of traction. A lot of volatility once again. But anyway, the range has been protected on the downside. So that's perhaps the good news. Let's talk about the movers then. On the upside, the star of trade really was Hero Moto. As our colleague Parikshit has been telling us, company is going to be coming out with an event in Jaipur in the coming few days, talking about a lot of premium bike launches. So that was a star, about 4.5% higher. And Bajaj Auto absolutely in step, keeping it company. The next biggest winner on the Nifty, 3.5% up on Bajaj Auto. So these two were doing well. Even Eicher actually had a good rub-off, 1% up on Eicher. So two-wheeler boys right up there. And then it was a second day running of strong buying on Reliance, 2.5% up on that counter, keeping the flag flying high for the Nifty as well. Now, IT is a bit split today. You've seen TCS end on the positive side of the screen ahead of the numbers. Infosys, by the way, is one of the weaker stocks on the index, down about 1.5% almost. So Infi not quite adding up. Let's see what else worked for the market. Axis Bank on the upside. But again, if you're talking Axis Bank on the upside, there were a lot of names like HDFC Bank that were dragging. So even within banking, it was not uniform. It was really all over the place, very mixed trends coming through. If I talk about some more weakness, then L&T, Nestle, which has had a very good week so far. Today there was some profit taking on Nestle. Throw in an ICICI Bank and an ITC, two more heavyweights, which led to a downward draft. So absolutely split as far as the Nifty is concerned. But I mean, 20 points of an up move for what it's worth.
Okay, well, on that note, though, we'll have to wrap up on this edition of Closing Bell. Markets Forward comes up next.